Alrighty, guys, 25 basis points. Man, we got a rate cut today, and it's the first one since December of 2024. And oh boy, was the stock market volatile. Holy smokes. Look, the S&P 500, it closed down only 0.1%. But man, look at this chart on the intraday. This thing went from what? 659 all the way to 662, down to 654, all the way back to 660 by close. So talk about volatility today. Even though the VIX was down 4% on the day, it was still a very choppy day across the board. QQQ went all over the place. It closed down about 0.25%. The Dow went up, though, 0.6%, and the Russell ripped. I'm pretty sure the Russell, at one point, it was up a lot. I guess it closed down. Yeah, it popped a good amount, but then it closed down. Not down. I mean, it went up 0.25%, but it closed on a down swing, rather. But, yeah, we got a quarter, percentage point, 25 basis point rate cut, and a lot of people were arguing for a 50. And honestly, man, I wouldn't have, minded a 50, considering how weak the labor market was in August. That was kind of the cherry on top to where Powell could have been, that could have been what tipped them to do a 50 basis point, but he didn't. I feel like maybe he should have, but we are going to get two more cuts, and we're going to talk about that. We might as well dive into it right now, and later in the video, we'll talk more about some other stocks I'm looking at, overall what's going on. But let me pop this up right here. So again, we got a 25 basis point rate cut, blah, blah, blah. You guys know about that already, but that puts us at 4 to 4.25 on the Fed funds rate right now, and this shows right here the Fed funds rate. It's the first cut in 2025. We've covered that before here, or maybe that was on the other platforms. Either way, follow me on Instagram, TikTok, guys. We make the short form videos on there, but we can see here first cut since 2024, the end of the year, and it's the first of, again, a couple that we're going to get here pretty soon. And if we come down, we can see, let's see, I want to show you guys. Looks like uncertainty about the economic outlook remains elevated. The Fed statement said the committee is attentive to the risks to both sides of its dual mandate and judges that downside risks to employment have risen. We can see that. So stocks were volatile after the decision was released, with major averages mixed, blah, blah, blah. We can see wide range of views. I want to show you the outlook here. So the plot is done anonymously with one dot for each meeting participant, but Myron has been an advocate for much lower rates. So let me see. I missed this part. Along with the Fed rate decision, officials in their closely watched dot plot of individual expectations pointed to two more rate cuts before the end of the year. You guys see that, right? Two more rate cuts before the end of the year. And the grid, however, showed a wide level of disparity, with one dot, possibly Myron's, pointing to a level total of 1.25 percentage points and additional reductions this year. So he wants way more cuts. We can see 9 out of the 19 participants indicated just one more reduction this year, while 10 said 2, or saw 2 more cuts. So it's kind of a mixed bag between 1 cut, 2 cuts for the rest of the year, which would indicate moves at the October and December meetings. So honestly, man, the way things are shaping up, I think we're going to get another quarter basis point or a 25 basis point rather in October, and another 25 in December. With how things are looking now, that is my prediction. And who knows, it could be more aggressive than that. We'll see. But a majority, it says here, of the FOMC is now targeting 2 further cuts this year. Yup, indicating that the doves on the committee are now in the driver's seat. Looks like it says, we think it would take a significant upside surprise in inflation or labor market rebound to take the Fed off its current easing trajectory. I agree. And honestly, I don't see the labor market getting extremely strong over the next month or two. So yeah, I think we're getting 2 cuts, 25-25. That's my thought. And the plot indicated one cut in 2026, which is kind of, I think we were expecting what, three? Yeah, significantly slower than the current market pricing of three. So we were expecting three cuts in 26. The new dot plot indicated one cut, and officials also indicated another reduction in 2027. But obviously, guys, I mean, look, the Fed's. You think the Fed really knows what they're gonna do in 2027? It's you got to take it with a grain of salt. You know, they don't even know about a month out, let alone 24 months out. So, you know, take that with a grain of salt. We could see more rate cuts or, you know, none at all. Who the heck knows, right? But yeah, that's kind of what is going on here as of, you know, today, this meeting, 25 basis points. And again, I think we could have got away with a 50, but I understand where Powell's at. You know, he doesn't want inflation to spike back up. Especially with tariffs now, that's a risk. We don't want inflation going crazy, you know, and rates getting cut aggressively, which is also, you know, inflationary. So he's towing a line here, and I mean, I think we could have got away with a 50, but the fact that we might get 225s basis points cuts to end the year off, that might be what the market needs, just enough, you know, to keep this market rocking and rolling. But like we saw in the recent video, on average, the last 35 years, after cuts started, the 12 months after, the S&P on average has returned 3%. So we covered that in the SoFi video earlier. Go check that out. But keep that in mind. So I don't know. Is this going to be an average year where things aren't so hot now over the next 12 months, or are we going to keep ripping? We shall see, guys. That's the beauty of the market. Nobody knows what's going to happen really, but it's, you know, we can make educated guesses, but we just got to wait and see. So that's a quick rundown on, you know, the Fed, rates, what's going on there. Stocks in general, mixed bag today, kind of rocky overall, but we'll see how we wrap the week up. Make sure to subscribe because, of course, we're going to do more content, you know, tomorrow, the next day, and the day after that, you know, we're gonna keep making content, guys. So make sure to subscribe and check out all the other platforms, TikTok, Instagram, Facebook. All those links are down below. I appreciate you guys. So yeah, let's see what stocks did well. I mean, we covered Open earlier today. That did fairly well. SoundHound is one that we covered in the in that squeeze video I made. Stocks to watch with high short interest. SoundHound's doing pretty well, up about 3% on the day today. It closed looking pretty bullish, guys. Cup and handle breakout potentially on the making. So SoundHound maybe for a shot to the mid-high 16s, 17. That's where it could be going based on these charts. So I like the way SoundHound's looking. What else? We had some, Tesla, continues to freaking go. This stock eventually is going to pull down aggressively, but it might not be for a little bit. Who knows? This gap up to about 450 could fill, 445, which was the high from the middle of January. If that were to break, we would be at a fresh high for the year, but honestly, I think a pullback's coming before that. We have to wait and see how that goes. But Tesla keeps on going, man. Let's do one more. What else did well today? Let's do one more. Netflix. All right, hold on a second. Netflix 2.3%. Not looking extremely hot on the charts yet, but it's getting close, man. You know, we're at the moving averages on the 4-hour chart, approaching a big resistance at about 1250. We're at $1,230 a share. So if we're able to get out of 1250, we kind of have a cup and handle here. If that were to play out, guys, 1,300 plus, we could be making our way back there. Time will tell. So I'm gonna set my alert at 1250 right now. Might as well do it. Let's do that right now. Boom. So yeah, what do you guys think? Let me know your thoughts in the comments. And before you click off this video, check out the Patreon. If you guys want to keep up with what I'm doing in my portfolio. I'm buying stocks weekly. You guys get to see how I run the portfolio, the performance, full transparency, the whole 9 yards, guys, is on Patreon. Link down below. Shameless plug if you guys want to join. If not, it's all good, guys. No pressure, obviously. And with that being said, cheers. I'll catch you all in the next video.